Doc here from North America. Good morning, good afternoon, and good evening. It's Friday night somewhere, huh? How about that? And it starts the 3-day weekend here in the States. So let's get rolling along. Let's see, where am I at here? Trading and Dukascopy, and there it is. And you should be seeing the pictures live from Doc. And let's see, what else have we got brewing here? It looks like everything's moving along just fine. I see everything up on the chart. Oh, yes. And let's get the fact check spreadsheet up there. There it is right there. All right. LS. Okay, where did we leave off yesterday? You asked the last question. So what was that? Oh, I'm doing fine today. You know, the 3-day weekend coming, you know. Gassing up the boat. You know, life is good. Let's see. What is? Let's see. What was it? I saw a good question from you yesterday. It was at the end. You asked a good question, and I didn't get a chance to respond to you. Let me think now. I'm thinking. I'm a thunking. If you can give me a hint. Oh yeah. Swaps. That's it. And the effect, right? I didn't think so. I mean, I think that it was. I'm trying to remember what I thought when you asked it, because I was flying out of the webinar at the same time. The swaps having an effect. I think that's what you were. What were they having an effect on? I forget what you were asking. You were asking what they had an effect on in particular. And I guess by now the news has come out, right? Let's see what the stock market's doing from all that news. Action, camera, news. Let's see what it's doing here. Let's see, where are we going here? Oh, down here we go, like that. So it's moving back up again. Okay. So they took it down before the news, and now they're taking it back up. Swaps and national holidays. That's it. Yeah, that's right. The carry trade. Right, that's what it was. Yeah, they used to. I remember a long time ago with the cash, there was a carry trade. You tried to do it over holidays, and you got a little bit more in interest. And yes, but that was in a market that wasn't anywhere near as volatile as it is over the last 12 years or so. I mean, especially, how do I phrase this? Since the inception of listed options, markets are incredibly more volatile. And it should have been the other way around, but the use of the options and the education of the options is really poor. Remember, again, it's a competitive universe, and so us who understand options are not exactly educating everybody to how to utilize the options, because the professionals want to make money from the amateurs making mistakes. So, but in the old days, I do remember cash swaps being carried over a day with interest because of the holiday, because of the banking holiday. So it's like a 3-day weekend. I remember my old senior partner once said, he comes by on a Saturday and he says, "You're making money right now." And I go, "Okay." He goes, "Yes, because you're short premium." I was like, okay. He found that fascinating. I don't know why. Because he was not exactly a naked short premium seller to begin with, so it was funny that he said that. But anyway, yeah, he stopped by the house just to tell me that. I was like, oh my God, Sam, you're off the rocker. Let's see, I wanted to say something. I want to say sometimes the swaps rate calculated are different. I mean, when placing trade on Wednesday this week, it's calculated as 4. I don't really play that anymore. Due to the fact that it's such a low interest rate. It's one thing when it was at 13% or 9%, you really could make an income out of it. But when you're only playing with a quarter percentage point, or you have to pay, I don't really pay attention to it. Now, the swaps mainly, I guess you could say, the carry trade with like last year, the swap with the dollar Swiss was an outstanding win. I'm not much into that, but I guess there is a good game to it, because I'm not really happy with the way they hedge it, and that's why my mind doesn't lean into that direction. Yeah, I don't really, like I said, I don't really follow it that closely. You know who? I think it was Daniel and MHB that were telling me, following the swaps, and we were looking at them, throughout the year last year. But I don't really pay attention to them too much. I did follow the Swiss dollar swap because it started off the year at 1,200 points, 1,200 pips, and it finished off. I think the worst it ever got was 700 pips, and then moved back up into the 12s again or something like that, and that was pretty good. But I'm not really happy with the hedging of that. Um, to me, I like a solid hedge, and it's not really a solid hedge. You're doing the long-term capital management play. Really, that's all that really is. In other words, you think you can speculate on what the return will be, and you hope to hedge yourself and get out and race the decay. And that's what you're doing, is you're racing against the decay, and you're hoping that you're going to cover. And to me, I'm an options trader, and I kind of like the idea of my hedges all to be 100% bulletproof. And so my mind doesn't even aim in that direction. E.g., dollar position open at settlement on Wednesday evening, rolled over to Thursday. Yeah, see, like I said, I don't follow it to see it. The only difference I was watching was when the traders that were following or who play the swaps. The only swap Americans ever really seem to care about more than anything else is the Aussie dollar swap, because of the higher interest rate factor there. So that's the only one I rarely. That's the only one I ever really hear about around here. And even then, I haven't heard about that in a couple years. So you're saying that that the way they're measuring their ratio to it, or the way they're paying out. So you're saying 3 times on Wednesday. Maybe it's adjusting for the weekend. It could be doing that. Okay, yeah. So that makes sense. Yeah, like I said, I remember in the old days they used to do that. Because it used to be 2-day settlement for European currencies and 3-day settlement for Asian currencies, and the only real Asian currency that was really that active was the Japanese yen. So I hope I've given you some insight. I'm not sure if I have. I've just given you my opinion. That's pretty much what it comes down to. And again, I'm such a, like, when I'm doing an offset, I want my, if I'm going to do a hedge, I want it to actually be bulletproof, 100%. And a swap is just a race to see if you can catch some decay versus uh, the volatility. And since Monday is a holiday, the swap is for. That makes total sense. Yeah. Yeah, like I said, the old days they used to do that too. But again, markets are much more volatile now. Matter of fact, someone called me last night and said, "Did you see where the Nasdaq opened down? 70 or 80 points." And I was like, "Yeah." And they said, "I did. How did? What happened? How does that work?" I said, "Buyer. They line up buyers and sellers, and there was more sellers than buyers, and the pressure was on to drive it down in value." Yeah, but 70 points. It's like, yeah, that's the way it works. So, more buyers than sellers, it's gonna lift up. More sellers than buyers, they're gonna take it down, and that's pretty much the action, and that's what we see there. My question is: trade happens in Wednesday, rolled over Thursday. Why Thursday rate also go to Monday rate? Because the U.S. banks are closed, so they're paying interest on it a little bit more in a sense. And the shorts are, losing it. I guess it is. Let's see. Longs are paying it. Shorts are taking it in. Does that make sense? All right, let's get rolling along here. Stock market seems to be trying to pump up a little bit from the numbers. Let's see if we can see what the numbers were. I didn't really have that up. Let's take a look and see the labor numbers. Let's see. Let's go to what the labor numbers look like. And the answer to that is unemployment rate unexpectedly tumbles as August payrolls come in line. So Amid a wide range of sell-side estimates, a whisper number that was either too high or too low, depending on whom you asked. Moments ago, the Bureau of Labor Statistics reported in August the number of payrolls was almost unexpectedly in line with consensus expectations, according to August jobs report. Some 1.371 million payrolls were created, essentially on top of the 1.35 expected. So it was a little bit higher. Okay, so not bad. Likewise, the average hourly earnings also printed generally in line, rising about 4.7 in August, unchanged from the previous month. Okay, so the economy is lifting back up. We know that much because Trump is fighting to make it back into norm. The Democrats want to close the economy. Trump is trying to keep the economy open. Really strange to have a government institution like the House of Representatives constantly trying to step on it. But anyway, that's what it's going. All right, now let's go take a look at the euro or any other product anybody would like to look at. Looky, looky, looky. And there is the euro. No, that's the NASDAQ 100. There's the euro. And you can see a little movement down. I guess that means the dollar is firmer. And let's see, what else can we say about that? Yeah, I hope I answered your question there. It's a good question. And then you can see here, we're on Friday. You can see the white line below the time manifold. And let's put it up on J4X too. See what they look like over there. Looky, looky, looky. Where's my cookie? There it is right there. So you can see downwardly pressure on the euro. We are in a daily sell right there. Yeah, 2 days in a daily sell. 15 weeks in a buy. And it's really battling hard to try to stay in that weekly buy. You can see on J4X, our lines are moving down towards the bottom. And you can see some red bars there with the hinky ashy. 3 days of it. Interesting. And that is the action we're seeing there. Oh, okay, here we go. Aussie dollars, check it out. Check it out. What it is what it is. Aussie dollar. Right there. 72.71. Let's find it over here on the spreadsheet. That is 20 weeks in a weekly buy, 2 days in a daily sell. Yeah, that makes sense there. Daily sell. There we go. And you can see it's the pressure there. And then we go check it out over here. Over here. Right there. Same situation. So, didn't we put a little red line in there? Where'd that red line go? Seems to keep on disappearing. Right there. So that's 2 full days in the daily sell, heading on its third. And that little, is that hangman type thing going on there from a couple days back? That's always kind of fun. We're keeping a close eye on the. We're watching the candlestick action now a little bit more, so that's always interesting too. And let's see what else we got going on there. Let's look at the cable. Let's see how the cable's looking this morning. Cable. And you can see the white line here on the Aussie is having an issue about trying to get through the time manifold itself. So it's still pretty damn firm. So more than likely they're going to probably try to find a bottom unless they really take this thing down. Now let's go to cable right there. You see cable, same situation. They all seem to be holding up in their weeklies. Even right now the euro is holding up in its weekly. And let's go find cable on the J4X right there. So you see that one there too at the same time. It also is trying to move down, and it is, white lines through the dotted, what I like to call the 3-dimensional zero line, and piercing both purples. And then you can see it here. We are basically, I guess when they're crossing, it has that effect, where they're doing something in the like that matches our gas line. So nothing zeroed out there. And a couple red dots and what? A couple hinky, ashy red bars. So that pressure is on still there. Now let's drift over to NAS dollar. Where are you? Right there. And there's NAS dollar. I think, what did that do? That went into, just like the cable, you can see 7 weeks in a buy and 1 day in a sell. We have the NAS dollar right there. 1 week in a buy, 1 day in a sell. And you can see the same thing going on here, breaking down right there. See, this is why we watch the J4X. It confirms relatively well with our work, at least 75% of the time, which is in the 70s. Let's put it that way, low 70s. So, but it's still better than nothing. And then let's check it out over here. So let's see, scroll down. Right where? Right there. There it is. You can see here it's broken through the time manifold. Both are down. This is going to be a second day. I guess we should put a little line in there since we're looking at it. Like so. There was the sell. There is the buy. Okay, the buy's up top here. Should be down here, but that's all right. And we'll see if this does a little bounce up again. This is holding up very well here with the time manifold. So NASCAD's not having any issues there. How about now the Japanese yen? Let's see what that's doing. There's the yen there. Let's check it out over here. The Yenski. Dollar yen right there. And on the spreadsheet, that's line 19. We are 11 weeks in a sell, 2 days in a buy. Let's see if that buy is leading us to, yeah, it is. Look at that. The buy is leading the weekly into a buy. Look at that. You see there's the daily buy, and if it stays here, we'll be in a weekly buy going out the door after 11 full weeks in a sell. That's pretty cool. Let's see. Anything else here? Is there anything else to be said about the yen? Just that I guess that's trying to tell us that the dollar wants to go up a little bit, or is trying to. Let's put it that way. We've talked about this, the election thing. It's going to be, this market is going to be very interesting over the next couple of weeks. The dollar is starting to firm up. They keep on saying there's a landslide for Trump. So the media is not saying it, but all the polls are saying it. Actually, I read something that was really funny. Last presidential election, all the major networks had polls out right after the conventions. And this year, none of the networks are reflecting any of the polls after the convention. I mean, none, zero. I remember it was 2 days ago I read that. So it's going on now a week for one convention and 2 weeks for another convention, and none of the major networks are discussing the polls at all. So that's classic as usual. It's like we live inside the propaganda machine. All right, so there it is with the yen. So we've answered Alessa's, was it 1, 2, 3, 4 products? That's pretty good. You got 8 more to go. All right, remember, it's cheaper by the dozen around here. All right, now let's see, where else do we go from here? Let's take a look at Turkish Lira. Right there. 39 weeks in the buy and 3 days. Is that 3 days in the buy? Oh, my glasses on. Yep, 3 days in the buy. So now let's find it here. Right there it is. You see it moving up. Are we at all-time highs again? 55.25. Yesterday was 50. No, wait a minute. 52. Yesterday's high was 52. What was it? Yeah, 52.78. And what was this one? Wasn't that 54? Oh, that was 44. Okay, so we're making another all-time high here in the Turkish Lira. Right there. No, that's not it. Right there. There we go. This will be interesting. You can see here on J4X, look at that white line roaring up through the dotted line, or the three-dimensional zero line, and the purples are trying to head up to it at the same time. At least one out of two is. Do you mind explaining how shall we trade professionally without stop losses? Options? Use options instead. So if you have a position on, you can buy a put if you're long, and you can buy a call if you're short. And that's basically will take care of your stop loss on the underlying product. Now, I can get more elaborate with that. And what you try to do is you can play with deltas of the options, and you can sell premium against some of them, and you can do back spreads. Back spreads is where you sell less than what you're long. So in other words, you might be long 10 calls and you're short, say, 3 or 4 calls. And at the same time, you might also be short the underlying product. That'll give you an upside hedge. Now, there's going to be slippage in there, but again, you're putting the position on mainly to be short the hard delta, the spot or the futures. So what you do is you build another position in the options side that will help you out when it rises. It gains in value, and so then, but you're really trying to trade and you're trying to be cash, price neutral. In other words, you bought the multiple more calls for the same price you sold the short calls. That's why you're flat. And then if you're short the underlying product, and the product is going down, obviously you're making money. And obviously if it's going up, you're losing money. And then what you're doing is you're depending on the back spread. We call those back spreads because you're buying more of the back part of it than the front part of it. You're shorting the front part of it. And so that will give you gamma on the way up, which will hedge your short underlying product. And so that's what the answer to that all is. Does that make any sense to you? We can draw it out, explain it a little bit more deeper if you want. But that's the premise of it all. But if you're short-term trading, also, okay, how is the original position size comparing to the hedge position size in this method? Let's see if we can. Okay, let's see if we can ferret that one out. How is the original position size, which is what? The original position size is the short hard delta. In other words, the spot or the futures contract, all right? Or be it a stock or whatever. You're short the hard delta. That's what we refer to as the hard delta, because when you're short spot, you're short 100 delta. So we refer to that as hard delta because you can't be any more short than 100 delta of any product. So if you're short 10 spots, you're short, and if you want to give them 100 delta each, obviously you have to give them 100 delta each, then you're short, 1,000 deltas in a sense, 10 times 100. And so when you're short a call, if it's not at the money or in the money, it has to be, if it's not deep in the money, let's put it that way. And even a deep in the money, depending on the amount of time, the delta could be only in the 70s and the 60s. So how the original position size is comparing to the hedge position size in this method. Well, again, you're buying more in the back and the cheaper ones and selling less of the expensive ones. So like a 10 by 4 or 10 by 6 or 10 by 3, depending on how deep in the money it is. And how close the 10 are at the money or out of the money. And so then what happens is that if you're shorting something and you do that at fair value for the equal value on the option side, then if it falls down, you shouldn't lose any real money to it. You should make some money, and then you're short at the same time. There's going to be slippage, and the short at the same time is making 100% on its short. So, e.g., original position is about 1 month. How much is the hedge position size shall be? Well, again, you just do it in deltas. So you take a look at the delta of the options, and then you adjust from there and run a simulation to see how well it correlates to your short going up, your hard short, your 100% delta short. So in other words, if you're buying options that have a delta of 30, and you buy 10 of those, that's 300 delta. And then you go short 300 delta underneath. And if you go deep enough in the money, it will, you match them up to equal the long delta. So if you're long 10 at 30 delta each, then it should probably more than likely be a little more expensive than that. But I'm just giving you a generality, not a perfect exact. So then you need to sell 300 deltas on the option side, but in less quantity, in the money more. Okay? So if you find options that are in the 60 delta, when you sell 5 of those, there's 300 deltas to match the 10 that you're long. And now you take a look at the simulation to see how much it rises in value and how much you make in value. And you remember, you have a decay rate going on. You have a little bit more options you're long than short. You have a little decay rate there. And the decay rate will be a little bit higher on the deeper in the monies that you sold to hedge it. And then at the same time, you're short the 100%. So then you'll see if you can be short, say, if it's a futures contract, you might only be able to be short one contract with a 10 by 5 or 10 by 6 or something like that. And if it's you might have to be a 20 by 12 or something like that, or a 20 by 11 to be short 2 futures contracts, that type of thing. 1 million. So 1 million probably would equate to about 8 futures. Yeah, I think that's how it would work. It would equate to about 8 future contracts. But again, it depends on the exchange and the country you're doing it in. In the States here, I think all our contracts are 125,000. So 125,000 times 8 makes it 1 million. So now, does that make a little sense there? More? We can keep on discussing this. I think there's when we'll list this as an options webinar today. The counter position. Again, the deltas. And some time's your friend. And it depends on how long you want to be short, too, at the same time. If you're going to be short for, if you're thinking about putting this on for the election, then obviously you're talking about, 3 months out, a little less than 3 months out. The November contract does expire in options here in the States, like about the 7th or something like that, or the 12th. So that's probably a goodie, and I'm sure it's reflecting the potential volatility. So we can do a little simulation test on that. What I might do is we can do this on Monday. We'll discuss it theoretically today, and I'll do some simulations and figure out to see what deltas would fit that and see how it works. How does that sound? What product are you interested in? So I'll do it in the right product too. And it'll all come down to the volatility of it, depending on the product itself too. In other words, if you try to do it in the Aussie, and the volatility in the option, will be different than, say, the euro. It'll be higher. Which products are you thinking about doing it in? Cable and euro, or Aussie, or New Zealand, or I'm not even sure we can get options on New Zealand. I mean, I buy the Aussie dollar, a spot Forex for select counter position. So you're buying that, so you're thinking that it's going to go up, right? So then you do the spread in puts. So you're buying 10 puts and selling, like basically 5 puts that are more valuable. And then we'll take a look and see what the delta is for that. And there are programs all over the place. I see them advertised. It's just that most people are not very comfortable, playing around with the options. But, there's plenty of programs floating out there, probably for free, that you could punch those numbers in, and they would give you the answer you were looking for, and we can explore where to find those and how to, and then try to look at the deltas. And what I'll do is I'll do some homework, especially with a 3-day weekend, and see if we can find, I think there are Aussie options, so they may not be the most liquid things, but you could possibly get that position on by a broker. So spot Forex, selecting the counter position, and you're thinking about being long Aussie against the dollar, right? So you need to hedge it with puts. And if you were going to be short the Aussie dollar, then you could hedge it with calls. How's that sound? And it probably will equate to about 8. I don't know. We'll find out. I haven't really looked at one of the problems I have about giving you better information on the actual cost of it and decay is because I don't really look at the Aussie options, and I'm not really sure what the price tag is on them. What volatility they're playing. They're using, and so in a day when the volatility used to be 15 or 20 or 7 or 8. Now I've seen them at 35 and things like that. I mean, these products nowadays move. So, we'll have to check it out. Oh, most definitely. I'm going to give you a physical example. We'll put it up on the screen. You'll be able to see it. I don't want to fish for it here, because what'll happen is I start looking now, and all you're doing is watching me go search. And I'd rather go and figure it out and have it at my fingertips, and we could present it much easier. Oh yeah, most definitely. We can do it on Monday. So, especially with a market there's no market on Monday in the U.S. stock market, so makes it even easier. What shall I search in Google to find out information about the calculation of selecting counterposition delta? I would Google Larry McMillan, and he may refer to it as a backspread, using a backspread to hedge your long, or a backspread to hedge your short. That would be one of them. It's not that I don't trust others. I don't really pay attention. I know there's something called Tasty something out there. They talk some good option stuff. I think they have a website. And another one that's really strong is Toronto Dominion, TD, Thinkorswim. Really strong in doing the options, and they give you the software for free, and you can create a simulated account even, and not have to put up any money. So they're the 3 I know that are really dynamic when it comes to options all the time. We'll give Dukascopy a chance. We'll go take a look and see. But I think they're just doing binaries at the moment, which is that's an interesting way of looking at it too. If you could buy the binaries going out, how far out do you want to go too? Are you looking for, say, to the election? Or are you looking for, for the next 2 weeks? Or what are you thinking there? Because that'll make it easier for me to... I would do both. Knowing me, I'll be running the simulation, so I'll be looking at, how the decay rate is on the short term and then on the long term. Are you thinking November? Is that what you're thinking? Or you're just thinking about the carry trade? And so that's the way I look at it. So less, when you get a chance somewhere along the line, let us know what time frame you're thinking. 1 month, 2 month, 3 month. Are you trying to catch the whole carry trade and hedge that? We can come up with that one too. Mm-hmm. Who knows with the communications? We may have lost the less for a few minutes here. And so anyway, traders, we're going to label this as an options conversation today. There we go. I open position daily, expecting it to reach to take a profit daily. If not, I keep it for a few days and until it reaches the take the profit. Okay, just short term. All right, that's possible. We'll look at that. Yeah, and depending on the liquidity of the products, um, we might suggest you're involved in a longer term position so that you can always jump in. Obviously, one side though. Unfortunately, that's the only problem with that. So, because in other words, if you're long Aussie, then you need to be buying a puts back spread, and if you're short Aussie, then you need to be buying a call back spread. So we'll figure that out. That's not earth shattering. We'll figure that out, and then we'll present it and show it to you on the webinar on Monday. And that'd be pretty cool. Yeah, I understand what you're saying. Well, stop loss is more than likely, or again, it depends on how you're measuring. You know what I mean? That's what it really comes down to. When I say measuring, measuring the amount of time and price you're trading for to begin with. So that is really the big gig of it all, No, that's not what I want. There we are. Mm-hmm. No, I don't want to do that. Let's see if we can restart something here. I'm trying to get back onto my Skypey. No, I don't want to call anybody. Why is it listed as a call? Camera? No. Anyway, for some reason, I'm going to restart this thing. So, that's no problem at all. We'll do that. All right, where'd we leave off? We were looking at the Turkish Lira going to a new all-time highs there. Let's jump over to. You have any other product you want to see? If not, I'll just keep on rolling along. Let's see what Canada's doing. I think we went into the daily buy there yesterday. Oh, Canada, right there. And then, let's see, old Canada. And there it is right there. On the spreadsheet, that's line 20. We're looking at 7 weeks in a sell and 1 day in a buy. Right there. Still in the buy here. But look at this white line versus our time manifold on the negative side. And it's, it's like, it's not doing anything. You know what I mean? It's not making any major challenge there. Yeah, I guess you would call that professional too. I like the way you use those words, a professional hedge. I have to say that I'm not really that impressed with the way they do their hedges. They can get really sloppy. They're shooting for everybody thinks that selling options is the better way to trade, and I've never been convinced to that at all. The best thing you can do is you can what's the best way to describe this? You can trade options with different option spreads, but nothing more than that, and because professionals can be naked. That's what was driving the stock market up over the last few days, weeks. It was supposedly the option houses were selling to their clients the options they wanted to buy, and it was putting major pressure on the stock market. They had to come in and hedge their short delta of the call upside to adjust, and that was part of the pressure on the upside of the market itself. And the market was getting ahead of itself because they were just reaching because they had to hedge themselves. So that is why I say stuff like, I'm not impressed how the professionals hedge, but sometimes I really wonder if they deserve the title of professional instead of just being commercial. I do have a arrogance about it. I don't like the idea of the hedging being esoteric, where they think, okay, it's like the long-term capital management, where they were selling Russian bonds and pairing it off with, let's say, like German bonds and things like that. And then the world came to an end with a ruble at 4, and all of a sudden it's trading at 13. So the bonds now lose 2.5%, and they're leveraged out by $2 billion on this stuff at a time in the 90s that, is illogical. And the problem is that one of their partners was Scholes, I believe it was, from Black and Scholes, the theoretical modeling option inventor, I guess you could say. One of the inventors for a way of modeling it. Not that we weren't modeling it before him. It's just that he got the notoriety. I think they may have won a Nobel for it, in economics for it. But in the end result is that, he basically crashed the world market to some extent from his foolishness. And commercials do that. They don't exactly hedge professionally. They hedge commercially. And so that they're trying to sell and make a profit from their hedge. And all you're trying to do is really make a profit from what you're hedging, not your hedge. And you're trying to put a hedge on that's relatively, what they call delta neutral or financially neutral, premium neutral. And so there's a little decay factor in there because you're buying more than you're selling. So, you have 10 decaying versus, say, 5 or 6 decaying. But the 5 or 6 that are decaying because they're more expensive, and they have a little bit closer rate of change for that decay factor. Now, obviously, any move up is a dilemma for you there on what you're shorting to begin with, and is not the spread. You don't think about the spread. Even with your short options against long options, you're not really short. What you really is you're hedged, and you're playing a back spread. And obviously, if it doesn't move up too fast, it works out really well for you. At the same time, you're trying to hedge hard delta. So, like I said, I'm not really happy with the way the commercials, the banks and institutions that are selling to the other brokers or professionals. I'm not really confident I would call that professional. So, it's, like I said, it's my arrogance. Anyway, let's see, where are we at? We're looking at the CAD, and there it is. There's the CAD. So it's holding up. Let's take a look at Swiss today. You really have my mind on options now. So, anything could pour out of this brain when it comes to discussing options. I've traded more options than, I don't know, 1,000 people a year. I don't know. It's so hard to say. I've traded tens of thousands of options in a week. So to me, I'm liquidly comfortable with options. Yeah, can you imagine? I've traded. Hell, there were days I traded 1 million options. Can you imagine 1 million options? I broke records for a year and a half when I was that aggressive. In other words, someone would break the record of how many options were traded, and I'd go break that record. All right, there's the Swiss. I'm trying to move my head out of the options universe here. There's a Swiss marching up, marching up firm. That is line 21. You can see it's been 14 weeks in a sell and what is that? 3 days in a buy. And let's see what it's like on Chicago Quant. Chicago Quant, you can see the same thing here. Matter of fact, look at that. The weekly is really getting close to piercing the zero line. It's a real battle there. If they push a little bit harder today, it could. And if it doesn't this week, next week it will be, as long as they stay up in this area here. And at the same time, you can see the daily has joined. Sometimes dailies can lead to weeklies, and sure enough, it's doing it. I mean, obviously, last week, it was here, playing with new lows, like 6-month lows, and now it's turning itself and moving north again. Moving north. So, let's see. What else can we discuss here? Which ones? I guess we can go into the crude oil. Crude oil is playing with its weekly sell number. Let's take a look at that. Right there. And that is line 5 right up in here. 17 weeks in a weekly buy. 7 days in a daily sell. You see, it's still buried down there. And then let's do it up in here. Right there, October crude. You see that? So it's been in a sell here. It's been leading us down, and it's been below the zero line, both of these things, for like 3 or 4 days now. So we're seeing pressure on the oil. And let's see. We can drift over to, let's take a look at gold. Unless somebody out there, there's not many people watching today. So we'll just drift over to the gold. And that's right below it. And that gold is 21 weeks in a buy and 6 days in a sell. And you can see here how Forex is mimicking our work. So that's really good. Does a nice job. And then let's go to gold. There's gold. No, that's copper. What a strange beast copper's been. I'll show you what I mean by that after we do gold. You can see the pressure is there too. And then let's go up to, there it is right there. You see how on Forex it's pushing down hard like that. And then over in Chicago Quant, you can see we've been in a sell since this wild little strange sell-off day, and then it was still in the sell, refused to give up. You couldn't be shorted, of course, because we're in a weekly buy here. So it's just a neutral at that point. You can see here it's trying to go through the weekly sell. It's really close, and it's pushing down towards the lows there. Let's see, what is the low today? Today is 1921.60, and that is 21.60. 21.60? So spot is on, oh no, that's the low. And then where's it trading now? So it's trading at 32. So it's a carry trade of about $6, something like that. Bitcoin, yeah, that's looking Bitcoin's looking interesting. Let's go over and check that out. I think it's like 10 days or 11 days in a sell. And you can see that. Let's see if we can show you that right here. It's at the bottom of the fact check spreadsheet. Whoa. Yeah, 11 days in a sell. See that right there? 2 weeks in a sell, 11 days in a sell. And let's go find it here. I think I have one there. Is that it? No. Yeah, there it is. There's a Bitcoin right there. There it is right there. It tried to get into the buy here, but we had a red dot, so it stopped it. And we were in a weekly sell anyway, so we wouldn't have bought it. And even if it had gone into the buy, you would have been back into the short here, and it's dropped another 1,000 points, it looks like. So let's see, we move this over a little bit more. Oh yeah, you can see that. Yeah. So it's trading at, it went down to 10,000 today, and from 11,500, it's dropped 1,500 points right there. But we went into the sell up in here, which is the 12,000 area, and went down, gave you about an 800 point gain, and then climbed back up again, but it couldn't get into a buy. It was interesting. And you can see here it's just pressed down again. And that's the Bitcoin, that's for sure. That is for sure. What else can we say about that? Interesting. I'm very comfortable with cryptos. I see, the evolution. I have no problem with it. I know a lot of people like to be antsy about it all, but I really do like the cryptos. I think that in a quantitative world, cryptos have total legitimate now. Oh, what's this? London Gold Vault Bait and Switch. As the London Bullion something or another LBMA prepares to bigger changes. Okay, so looks like we got something going on with the metals market. And that's what we have up there right now, isn't it? No, it's Bitcoin. Okay, that's a good reason why you should be happy with cryptos. So, in a coordinated development which signals more than meets the eye, Bank of England and London Bullion Market Association have together moved to begin reporting gold and silver vault holdings data on a 1-month lagged basis. Oh, okay, that's pretty good. Instead of the 3-month lagged basis. Okay, so they're going to make it a little bit more transparent. Let's see, under which they had been previously reporting vault stocks since 2017. Okay. As clear, the headline says, as clear as mud. Okay. All right, so they're just going to do a little bit more there. All right, and then, let's see, so we did oil, gold, and now we did this. Let me show you what I mean by crazy when it comes to looking at copper. Copper has been really off the rails. Since we're here, we'll do copper first. And there it is right there. And then, let's put it up on J4X. See if it's a little bit clearer in some way. Let's see, copper. There it is. Now, copper has been a pure torture when it comes to, you can see here now, this is making more sense. This, puts you into the buy here, and you see the green, and it's going up. Now, over here, look at this. Goes in and out every day. Now, we're in a weekly sell now for 2, 3, 4 weeks. It's going to be a 5th week the way it's acting right now. So 5 weeks now at the close of tonight if it stays down here. And you can see the white line is still underneath the time manifold. But look at this crazy action we've been looking at. I mean, it goes into a sell here. You can take that short because we're in a weekly sell. And then it goes up. And then obviously your stops have to protect you there. Then it goes into a buy. You can't get long because we're in a weekly sell. And then it gaps up. And then it goes into a sell there. And it's like, okay, I'll try shorting that. And then it gaps up again. Another stop that helps you lose less money. That's about it. And then it goes into the short here. And then it makes your money back. And the next day it goes back into the buy. And it goes into the short here again. And now it gaps back up again. I mean, I've not seen that many products have issues with my math. It's very curious. Maybe it's not the front month. We should take a look and see if we can figure that out. What is the front month of copper? Maybe that's what I have wrong. Is the front month is it's not the front month, and maybe that's why it's so sloppy. So let's try this. I'm gonna go see if I can find what they're toting as the front month. Let's see what we see here. It's a little challenging because I'm taxing the machine here. Because it's some of the worst I've seen in a while. Look at it. It just goes in and out every day. I mean, it's like, what in blazes is wrong with this thing? And so, it'd be one thing if it would go into a weekly buy. At least I could understand it. But it has no look like it's going to go into any weekly buy whatsoever. Let's see. I'm trying to find the front month of this product. And I think that's, let's see, we're running out of time here too on that. So what we'll do is we'll find that out over the weekend too. Look for the front month. But this is very rare for my math to be so upside down. There's probably 2 real losses there that, and only 1 win. So that's really sloppy. That's just incredibly sloppy. And all this in and out garbage. Ugh. It's just horrible. That's an interesting range there. I guess what is that? That's only a $5. I guess it's like a $10 range or 10-cent range, which is a lot, And then look at the back months. It's not very good. So this futures contract is really poor. Whereas here, J4X, basically emulates my work. You can see it went into a buy here. It looks really damn good. Goes into another buy here. Now, obviously, we're not looking at the weekly situation, but the daily it looks a heck of a lot better. It'd be nice if this had gone into a buy. I could put up with it going into a buy right here and not dancing, but sell, buy, sell, buy, sell, buy, sell. Now we're playing with a buy again. It's like, the last what's that? 2, 4, 6. 8 days, almost 2 weeks. It's been all over the place, and making no sense whatsoever. It's so rare that it must be that I have the wrong contract or something, and it's just very illiquid. So we'll try to clean that up because it's been really pathetic. Anyway, this is Doc from North America. Everybody have a safe and smart weekend. We will be talking options again on Monday, and Celeste will have a really good conversation and examples for you, live examples. So this is Doc from North America saying arrivederci, be safe, be smart. Happy trails to you from the Singing Trader here. Until we meet again, happy trails to you, to all my trading